Greetings. We're now analyzing NZD JPY, and let's get straight into the actual chart. So yeah, you guys know that we always start off our analysis on the monthly chart, and you guys can see that we had on the monthly chart a very nice inverted head and shoulders pattern at this level or area, with the side being the left hand shoulder, this being the head, and this being the right hand shoulder. And we had our neckline around this point more or less, and we saw price breaking to the upside of that neckline and then coming back to test that neckline. So we would have looked for buying opportunities at this level over here, and then we saw price move further up to complete that inverted head and shoulders pattern at approximately this level or so, and that's because this is where it started more or less, right? Yeah, so let's continue. I'm just going to add a neckline to that structure so that we don't forget about it, because that neckline actually is now a very strong level of support. And just remember that necklines and support areas are areas and not lines. Just bear with me. There we go. Right. So what else do we see on the monthly chart that is very much interesting? So on the monthly chart, we also had a very nice W structure over here, with a neckline being at this level more or less, and we can see that the neckline has been broken to the upside, and currently price is testing that neckline, and we should be looking for potential buying opportunities. However, we also have this candlestick over here. It is a liquidity candlestick, and it tells us that at some point price needs to head back to this level more or less to grab that liquidity and then possibly push further up, right? So what I'm going to do now is add a neckline to that W structure. Just bear with me while I do so. Let's see. I'm also going to mark this candlestick over here where it ends, because there's a lot of liquidity at that point, and that liquidity represents capital that needs to be grabbed by the market. So just bear with me while I mark that area as well, because it is also very much important and we should not forget about it. Let's see. So there we go. Right. Another thing that I see that is also very much interesting is the fact that we have these candlesticks over here, and they seem to be rejecting the upside, which tells me that there might be a reversal of sorts, right? And price may potentially, from where it is, push further down to this level, as I said, and then push further up, right? So what I'm going to do now is just add the Fibonacci Retracement tool, just to see if those two levels that I spoke about align with any of the key levels that we have on the Fibonacci Retracement tool. So just bear with me. So there we go, right? So can you guys see that the neckline, which is here, aligns with the 38.2% Fibonacci retracement level, and the liquidity candlestick that we have over here where it ends, it aligns with the 61.8% Fibonacci retracement level, right? So should price come back to this level, which is the 61.8% Fibonacci level, I would look for, or rather the 61.8% retracement level, I would look for buying opportunities at this point, right? The 38.2% Fibonacci level is also very strong, but it is not as strong as the 61.8% level, right? And as you guys can see, let me just delete this. As you guys can see, as I said, price has tested this level multiple times, right? And as I said, ideally we should be looking for buying opportunities, but price is currently moving sideways as far as this level is concerned, and you will see it when we get to the smaller time frames. And what may happen is that because the market is moving sideways currently on the smaller time frames, we might see a breakout of sorts to the bottom side, to around this level, to test, or rather to grab that liquidity, and price may potentially move further up. right? Anyway, let's move down to the smaller time frames to see what's going on. I'm actually looking for the weekly chart. So here we are on the weekly chart. Just bear with me while my system loads. Come on. Come on. Come on, come on, come on, come on, come on. We don't have all day. It seems my system is taking long to load. Let's see. Let me try going to the H4 chart. Let me go back to the weekly chart. Come on, come on, come on. Okay, here we are on the weekly chart. Sorry about that delay. I seem to be having slow internet for some strange reason. Nonetheless, let's proceed. Right. On the monthly chart, we've spoken about this W over here, this neckline, as well as this level being in alignment with the 38.2% level, and this one being in alignment with the 60% Fibonacci retracement level. Anyway, here we are on the weekly chart. So what do we see on the weekly chart that we should be paying attention to? On the weekly chart, I can see that we have a very strong area of resistance at that point, as we had multiple touches in that region. And as much as we have those multiple touches, can you guys also see that we have an opposing M structure at this point, with the side being the first leg of that M structure and this side being the second leg of that M structure. Now we have a bit of a dilemma in that currently we also have a W structure, an opposing W structure in that region, and both structures seem to have, or rather seem to share, a neckline, right? So if I can just draw it, let's see. So we have an M structure as well as a W structure, and they both have necklines in more or less the same region. So it makes it risky in as far as buying or selling is concerned, right? Because if I were to draw the neckline of this M structure, this is where I would draw it. Let me just show it to you. Right, my neckline would be around here somewhere, something like this, right? So can you guys see that it's a bit tricky and it's a bit risky, right? Because anything can happen at this point in time, right? Nonetheless, we'll head down to the smaller time frames to see if we can get away with making any trades in as far as these two opposing structures go, right? So what else do we see on the weekly chart that we should be paying attention to? Another thing that I see on the weekly chart is that we have this candlestick over here. It is also a liquidity candlestick, and it tells me that at some point price rather has to head up to that point to grab that liquidity as well, right? I'm not going to mark it, I'm just going to leave it, but I'm just going to head down to the daily chart. Come on, load up, load up, load up, load up. Apologies again for the slow network. Let's see. just bear with me, guys, while I wait for the daily chart to load. And apologies once again. Yeah. It seems as though this particular daily chart is taking long to load, so I think I'm just gonna stop my video here, and hopefully I can continue another time. Thanks for watching, and apologies for the inconvenience. Cheers.